Hey everyone, I'm Trading Man Dan. I've been trading for the last 13 years, and in this video, we're going to check in on the broader market. The Bears finally won a morning, but the Bulls came roaring back in the afternoon. I went short. There were a lot of red flags the second half of the day. I'll tell you what stood out to me and where we stand going into tomorrow.
So I made my first attempt at a broader market short in the last few days this morning on the live stream and grabbed SQQQ when the NASDAQ was up near the high of the day and was playing off of weekly resistance, and it ended up following through very nicely to start. But again, as I mentioned, a bunch of red flags. So first off, we have the S&P 500 holding the low of yesterday by 36 cents, keeping the daily stair-step pattern alive, keeping the price right under weekly resistance, and a very significant bounce as a result. If you look at the bounce retracement, we dropped significantly, but bounce retracement was something like 75, 80%. So almost took back the entire move. And so we know that as the Bears have to prove it one time frame at a time. And I had a checklist when I was live streaming, Bears need to do this and this and this and this, and they need to see this name roll over, and Apple needs a new low of the day. And they were ticking all those boxes, and they proved it on the 5 and 15-minute time frame. And then it was, okay, now we need it on the hourly. Don't be surprised if we're going to get an hourly bounce. It's likely to take shape, and we need to confirm the hourly downtrend as a result of that bounce if we're going to see the Bears start to take over into daily consolidation. And so on that hourly bounce, you want to see less than a 50% retracement. And then you want to see it set into the end of the day, and then you want to close near the low. And we just didn't do that. And the red flags were XLF had a V-shaped bounce back to the high of the day. So you can see XLF broke the low of the inside bar after rejecting from the high of yesterday by a penny into a gap fill, and to hit an area with no support in a gap fill and clearly break short-term support and then V-shaped bounce back to the high of the day is a big red flag if you're a bear, because XLF, the daily higher low, is the most likely scenario. And that just makes the bulls that much closer to shaping up a daily higher low. And if we see the NASDAQ start to cool off a little bit and the financial sector see continuation, it's going to keep the broader market strong. Right now, the broader market is consolidating sideways. And the bulls, considering what we have done in the last 8 days, they'll take sideways all day long, because that's extremely healthy to build a base of support after going straight up. The concern about when you go straight up or straight down is not establishing supports or resistances along the way. And so you see significant retracements. But if you trade sideways, you fend off giving back a significant amount of that move. And so you look at QQQ, and it's the same deal. Held the low of yesterday, green close yet again. We're still closing green here on all these names. That's now 9 days in a row of green on the NASDAQ. And again, it's just the mindset for me is there's everybody right now. We have even a new wave of shorts, like people like me today. And I didn't swing trade because I didn't see what the Bears didn't give me what I wanted to see. But it's all the people that are shorting this resistance to start the week, now shorting the resistance today. And it's just building up pressure of all these people that are right at this level. And again, it won't be hard for the bulls to just target those levels, knock them out, hit a quick move higher. And again, I'm just very open to that still being a possibility, especially after today. The other things that stood out to me, NVDA, lead bull, just no weakness at any point today. We had a nice 15-minute equilibrium, a tightening range that broke bull, and just continuation of its move up. We had Microsoft holding strong. Microsoft is now 1% from all-time highs and confirming a monthly bull flag. Amazon was showing weakness out of our major names more than other names, but Apple held strong, closed up near the high, lack of resistance where we stand on Apple. So we started the morning with a little Apple, a little Amazon, a little Microsoft weakness, but not significant in any way. Those daily charts are still chugging along and grinding higher. And so these were all red flags for me. Meta was a lead bear on the morning. Meta did exactly what the Bears wanted to see. Look at that weakness. We start at 320 and we drop almost 2% in the first hour of trading. But look at that recovery. As soon as I see our lead NASDAQ bear V-shaped to a new high of the day, again, red flag. I can't be comfortable as a NASDAQ bear if that's taking place. So we'll see what, I guess we got jobs data tomorrow. But again, started confident. Like, okay, I got a good entry. It's following through. I'm going to let this play out and try and swing it. But then by the second half of the day, nope, this is not what I was looking for. The bears are not proving it to me. And so heading into tomorrow with a fresh, clean slate again, and again, a mindset of we can absolutely break these weekly resistances before daily consolidation starts. And we can absolutely reject and start daily consolidation. I don't have an edge at this point. And, trader me 5 years ago with less experience would be loading the boat short right now. And it just seems too easy to stop out a bunch of bears with a 0.5% move higher on the NASDAQ stops out a bunch of bears. So NVDA, all bulls still, daily stair-step pattern. Semiconductors not quite as strong, but still in full control. Again, just these daily stair-steps. We're not going down if we set a higher low every single day. Even Tesla. Tesla is trying to shift its momentum, trying to build a base of support, 215 to 217. Bulls got to get over 226 for follow-through. But there's a scenario where the names that have had relative weakness the last few days set daily higher lows and try and head back to the recent highs. Healthcare did see a good bit of weakness. It had an hourly rising wedge that broke bear. But again, a very significant recovery. The bounce retracement, way more than the bulls want to see. So if this is going to be meaningful, we got to confirm the hourly downtrend. And the further you bounce retrace, the further the distance to break that support. So daily consolidation is underway. For healthcare sector, we did lose that support. LLY is heading towards all-time highs. It had its weight loss drug approved. So this is one of the major players in the healthcare space, and that all-time high is in play. The financial sector, again, as I mentioned, to break support that's clearly like the only level that we're watching in the short term, into a gap fill, straight into a V-shaped bounce to the bulls. This is a daily bull flag shaping up. That's the characteristic of a daily bull flag. And again, one thing that stood out to us in crypto 2 weeks ago, and crypto's still ripping, not that that matters a ton for the broader market, but I mean, these charts are 100% plus in the last few weeks. And one thing a couple weeks ago that had us looking at this shift was, again, it was these names are showing us the characteristics of what we would expect to see in a raging bull market. And part of that is back burners. And right now, the NASDAQ and the S&P 500 are trading as if they're in blue sky breakout. What do I mean by that? Back burners. First 5-minute oversold conditions the other day marked the hourly higher low, and we headed into continuation. So Monday, first 5-minute oversold, marks the hourly higher low, continuation. Today, it was first 15-minute oversold. We know we go one time frame at a time as back burners. If Bitcoin's in blue sky breakout, if the S&P 500 is in blue sky breakout, we scout first 5-minute oversold, we scout 15-minute first oversold, we scout hourly first oversold. And so today, this bounce was first 15-minute oversold conditions into a V-shaped bounce, and it's potentially opening the door for that to lead into continuation again. And so, again, just all of these things, the second half of today's trading, were tallies in the bull column that made me lose confidence in the bear progress from the morning. IWM still clearly the weakest sector. So again, there are some names where the bears are following through. And this just goes to show you, being able to identify correlation significantly helps. Anybody shorting the NASDAQ the last 3 days is frustrated. Anybody shorting IWM or XLE the last 3 days is extremely happy. So IWM is still all bear, hourly downtrend. We're still going to scout a daily higher low, but no sign of it. Hourly downtrend will remain our guide as we hit hourly oversold. And again, the energy sector, just free fall. This is one of those trades where it's an ideal scenario because this doesn't happen often, but you enter and it tells you you're right constantly. All Monday, you're right being short. You're right. We close. Tuesday, gap down, full bear control. You're right. Today, close at the low. You're right. At no point in this trade has there been any doubt or any second guessing. It's just been telling me that that was the right trade the entire time. And so to contrast that with the short today from the open on the NASDAQ, it told me I was right for the first half of the day and then gave a bunch of reasons why I might be wrong the second half of the day. So XLE, we're still watching to head towards daily oversold conditions as oil continues free fall, very significant follow through from the weekly downtrend confirming. Just like that, to get back to the high, we need almost 30%. So we're going to be looking for, as I mentioned, the tightening longer term range. This is the 2-month time frame. We will scout a higher low compared to 63, but this is already a big win for the bears. MSOS, cannabis, normally a gap up open signals the top, and you go back historically, gap up into full bear control, gap up into full bear control, gap up into full bear control. I can do this a lot. There's a lot of them. Gap up, full bear control. And we gapped up today, and it's not full bear control yet. Tomorrow, there's the possibility that we confirm an hourly downtrend if we fail 640 and break $6. But there's the possibility that things are a little bit different, and we're going up because Ohio passed legalization yesterday, and the start of earnings season, they're coming in pretty good as far as expectations. So it'll be very significant to me. Essentially, if we get continuation and break the high of today tomorrow, 644 is resistance. We topped out at 640. I won't act on that information, but it changes the probabilities of what's to happen after that. If this gap up does not mark the top, that for me increases the probability significantly that we can confirm a daily uptrend when this move does top out from here. So going to be closely watching just to see, because again, I can't look back at this chart anytime recently and find a gap up that did not mark a longer term top. The dollar. Looking for a daily lower high? Need to see a confirmed 4-hour downtrend from here. Maybe a head and shoulders shapes up. So a little bit of weakness in the dollar, but not helping the metals. The metals are still staying weak. Gold following through from that head and shoulders. We needed to confirm the 4-hour uptrend if it was going to be a bear break with no follow through on the daily, but we're following through, and now we're testing weekly EMA 12. And bulls need to hold that weekly EMA 12 to try and shape up a weekly trend change. If we see 50% plus retracement, that's going to be a red flag. And silver held on better than gold today. Bulls have to confirm a 4-hour uptrend back in their favor. They're trying to keep the bear breaks from having any follow through. This is the 12-hour time frame. Might have drawn this in yesterday's video, but something like that. And the miners just getting crushed. And so the way it's shaped up is, we know gold is due for weekly consolidation because we V-shaped from the low, and the miners had a big time bull day on Friday, but they gave it all back and then some. And it was essentially the miners are not positioned well for any gold weekly consolidation. And so GDXJ is still much stronger than GDX, but both of them giving back much more than the bulls want to see. And that just might extend, how long we stay in consolidation, because we have to see gold shape up a weekly higher low if we're going to be looking at bulls regaining any momentum in the metals and miners. It's been a very significant week, this week, 3 days in now, for commodities selling off. Everything on my list, obviously oil collapsing, miners dumping, metals dropping all week, uranium, CCJ dropping all week, copper dropping last 2 days. You go on down the list, platinum, free fall the last 3 days, natural gas, free fall the last 3 days. So there has been an exodus in the commodity space the last 3 days. Maybe they're going into bonds, I don't know. But TLT is performing for that swing trade. Again, just patiently waiting for the first daily uptrend in 3 months. And another trade where it's just telling me that I'm right the whole time. First entry was there. Follow through, daily higher low. We know consolidation's inevitable. Continuation. It's just doing exactly what we want to see. But natural gas, so we had the daily equilibrium break bear, and then we dropped down and broke weekly support. And so the bears are back in full control of the daily and weekly trends. And we are back to churning around, chopping around sideways. But a big win for the bears this week so far. All right, we'll see if the daily stair step can stay alive again tomorrow. NASDAQ and S&P 500 knocking on the door of weekly resistance. Another wave of bears jumping in today to try and head to that daily consolidation, unable to see it shape up. And again, it just takes a little pop up, little 0.5% move to trigger out a whole bunch of bears on the NASDAQ with where it stands right now. Got to stay agile and be ready for bold directions. Again, this is an unusual market. We had we take it for granted while we have it. We had very contained price action, very just most likely scenarios left and right. Pullback when we lose the daily uptrend for the first time in 3 months. Weekly lower high, most likely scenario. Downtrend confirmed into a bounce, weekly lower high, most likely scenario. Bearish continuation. And that was 3 months of nice and steady and most likely scenarios. And then last week shook that all up. And as far as I'm concerned, I'm still operating under the extra cautious, things are different kind of mindset right now. Prove it, bears. You came close today, but you didn't prove it. Do good things. See you tomorrow.
Most of the leaves are down, just probably 20% more to go. Usually it's the oak trees and the cypress that still have to go.